Hello there guys, I'm KOMMONFOREX, the Marksman. Welcome to my YouTube channel. In today's video, I'll be taking you through a simple trading technique that helped me make over 100 pips with my trading community on Telegram. So if you quite remember, in one of my previous videos, I made mention of the fact that I had certain trading techniques I actually used to take trades, and I recommended a number of them for you, where I talked about trades at reversals, continuations, breakouts, I even talked about correlations. So today we'll be focusing more on reversals. One of the reversal techniques I actually enjoy using a lot is what we call support and resistance. So without wasting my time, let's jump right into the chart. So I'll give you an in-depth explanation as well as the psyche behind me taking this through with my community. The concept of support and resistance was what backed my analogy in taking this trade. The strategy I actually used to take this trade was resistance. So I'll actually be explaining resistance, giving you a simple illustration as to what comes into my mind when I'm talking about resistance or trading with a resistance. What does a resistance mean? Like I said, price point beyond which the market fails to go any higher within a range. What does it mean? Now let me give you a high. If you don't know what a high is any turning point which is formed at the top. So this turning point we have up here is what we call a high. Any turning point you have at the top is called a high. So if the market now gives us a high and the market actually comes back to tap into that particular price again, any point in time, whether in a month, in a week, in a day, in a year, we normally expect a reversal from that particular high. So that makes this high what we call a resistance. So then we're actually expecting to take a trade here. Well, one more thing, a lot of traders actually wait for it to play out so many times before they take advantage of it. They wait for the market to tap into that particular range about 4 or 5 times before they finally take advantage of it. You always want to be ahead of the curve. You always want to take advantage of an opportunity before anyone else sees it. So how I actually apply this strategy, how I actually trade the strategy is that the first time the market actually taps into that particular range or that particular price is when I take advantage of it to trade. So like I said, now this becomes our resistance zone. But I like to focus on the price point much more than the range. Instead of focusing on the whole range, I actually like to focus and zero in on the exact price point that creates the market reversed. What does it mean? It means that if the market gets here, the moment the market starts traveling here, I simply mark out this zone, expecting the market to react in here and then reverse and come down. So it's actually going to either reverse and come down, or if it comes out of this zone and is going up, I'll try to apply my breakout strategy to take this trade to the upside. Taking a sell here means that my stop loss is basically on top of the range. Remember, I always apply market structure in everything I do. So now let's jump into the charts. So I give you a clear depiction as to how I took this trade. Open your charts. What do you want to do? You want to mark out your resistance. So you're either going to mark out your resistance with your rectangle or with your horizontal ray. So you're either going to do it with your rectangle or with your horizontal ray. I'm sure you've seen the rectangle so many times, but I prefer doing it with my horizontal ray because, like I said, I like to actually focus on the exact price point. Now let's place our horizontal ray, this two here, at where we expect the market to reverse as our resistance, and then our most recent low within the week as also what our support. So now if the market gets here, we expect it to reverse because it's a resistance zone. If it gets down here, we also expect it to reverse and go up because it's what a support. So now this up here is our resistance, this up here is our support. So now we are waiting for the market to actually travel. Either it's going to go up, hit our resistance, or come down, hit our support. So what do you want to do next? You also want to set an alert because it might not be by your chart when the market gets to that particular level. So I simply just tap on this horizontal ray, then I just click on this clock. Once I click on this clock, it gives me an opportunity to add an alert there. So clicking on this clock here means that I can simply just add an alert and then name it resistance. It means that if the market gets to that price, I also receive a notification that the market has gotten to my resistance. So I can now go there and then decide to wait for my confirmation or decide to take a trade. It all depends on what the market is doing there and then. So now all we need to do now is wait. That's all we need to do. Wait for the market to get to our levels so we can take advantage of them. So you want to see whether the market will get to your zone of interest, whether it will get to your kill zone before you take advantage of it. So you can see it's traveling upwards. It's traveling upwards to our resistance. There's one mistake a lot of traders make. The moment the market actually, gives them some small, bearish presence, they just jump in because a lot of traders consider the whole, range instead of focusing on the exact price. So I like to focus on the exact price because if I had focused on just this price here and then consider the whole range, and let's say I place my stop loss on top of this wick here, look at what would have happened to me. I would have seen a drop initially, then it will pull back, also pull back, then it just takes me out at my stop loss. So you realize I actually would have lost money if I didn't wait for the market to tap into my zone of interest. So always make sure the market gets into your zone of interest, then you can take advantage of it. So now that the market has tapped into my zone of interest, what do I want to do next? I want to simply just shade this zone, expecting my reaction and then my consolidation to happen here. So what I always want to see is, the first thing I want is for the market to tap into my zone of interest. Is to tap into my zone of interest. Then the second thing, I want the market to consolidate there. I want to see a bit of a consolidation in that particular zone. Then the last thing I want to see before I take any trade is my confirmation or my bearish presence. Make sure you write this down somewhere because it's extremely important you get this. So I now wait for my confirmation or my bearish presence to indicate that the market is about to reverse in this particular zone. So now I want to see these three things happen before I take advantage of this particular trade. So now the first thing that's happening, it has tapped into our zone of interest. We have our consolidation happening in here because, like I say, consolidation is when a lot of candles are actually playing out in a certain zone, telling you that what the bulls and then the bears are actually struggling to see who will take control over the market. So you look here, I realize that now I have my consolidation here. I also have my bearish presence, which also represents what my confirmation in the same range. This confirmation actually happened at 5 a.m. in the morning on Wednesday. It happened at 5 a.m. So because it was 5 a.m., I still wanted to see how the candle behaves there. So it took me some time. It took me about 3 hours to actually take this trade. I actually took this trade around 8 a.m. So if you look on your screens, you realize I sent this trade to my VIP around 8 a.m. I sent the sell signal NZD USD around 8 a.m. I actually even took another trade on Euro NZD, but I'll explain that in another video and then explain how I caught almost 200 pips on Euro NZD with a simple trading strategy as well. So I took my trade in this particular candle, which came at 5 a.m. So around 8 a.m. I took this candle. So my entry price was exactly this price, 0.6025. That was my entry price. So if you look on my screen, you realize that you see that same exact price there. So that was my entry price. Then my stop loss was also on top of the range because you remember, like I said, everything I do is based on structure. So my stop loss was actually 35 pips. So risking 35 pips on this trade, it means that at least, remember what I always say about setting your stop loss, at least I'm trying to make the same amount of pips as my TP1. So if I risk 35 pips, my TP1 is also around the 35 pips range. I want to make at least that to give me a satisfactory trade. But long term, I expect it to drop all the way to the support down here. But you still use the structures, you use the various turning points to set your other take profits. So you can have one TP here. You can even have another TP here as well. So let's say you have your TP1 here, which was about 35 pips, but you can also easily just have one TP here. So it depends on you. So your TP1 can be the same amount of pips somewhere here, then your TP2 here, TP3 here. If you want to hold a swing position, all your positions must be closed when you're holding to here. If you want to hold all, I don't know if you have the strength to hold all, but normally what I do is after taking my profits at all my levels, I simply wait and then leave about 10%, so 5 to 10% if I want to catch it to the next swing low. We've taken our trades, stop loss, take profit, we have all our key levels, we have everything. We just wait for the market to react to the decisions we've made. So we see an initial drop about 15 to 18 pips, then we see a pull back up to entry. Then what does the next candle do? So this trade actually tested our patience a lot. It goes into drawdown, it comes into profit, it goes into drawdown, comes into profit. What do you see happening on this particular trade? It goes into drawdown, comes into profit, goes into drawdown, comes into profit. So what do you see happening on this particular trade? I'm going to give you a minute to answer. I'm hoping you said you were seeing my favorite chart pattern, which was my bearish continuation. Remember this chart pattern very, very much. It happens so many times when you expect the market to keep going in a certain direction it gives initially. So this bearish continuation, like I said, it happens when the market drops, consolidates, and then drops again. That's the bearish continuation. You normally have the market give you a nice drop, it'll consolidate, stay in a particular range for some time before it breaks on the downside. So now you realize that you can easily see this bearish continuation printing here as a result of the candles you see here. You can easily see this bearish continuation. So now it even goes further to even confirm this trade for me that it's going to drop. So this actually tested my patience because it ended up being a swing trade. Remember I said you can actually day trade, swing trade, even scalp with just your 4 hour. With every single strategy I use, with every single trading style or trading technique I use, the 4 hour, it's a perfect companion for me. So now we see this candlestick printing. Now we have 4 candles consolidating here nicely. We want to have a breakout out of this. We look at the next candle, it drops nicely, it pulls back up again, another consolidation, another one also drops nicely, pulls back up. So you now see 6 candles. So the market actually consolidated in this whole range for what, a whole day, because each candle is what, for 4 hours. But your trade was still in profit, just that it wasn't sufficient profit enough. So the market actually closed in that same range. Then we held it onto the next day. The reason why I could actually hold this trade without batting an eye, without crying, was because I had my stop loss, which was 35 pips. I was expecting to raise that same amount of pips because it wasn't a stress for me to raise 35 pips on this trade. We also had, inflation, or what we call CPI, happening in the afternoon. So we're also expecting inflation to drop at 12:30 p.m. GMT on the United States dollar. And this trade was actually a dollar cross because it's NZD USD, so it was actually a dollar cross. I'll explain to you how to catch these fundamentals in a separate YouTube video, so no need to worry. Now let's just focus on how I caught this NZD USD trade. So now we have our consolidation. What do you see next? We finally saw our breakout out of the consolidation. So the initial breakout gave us how many pips? Remember our entry price was up here. Stop loss was also on top of the range, about 35 pips. Like we said, we were expecting the market to drop all the way down here. Our TP1, TP2 all were actually listed there. So we are now waiting for the market to hit any of our levels now. So we realized that the initial candle which broke out of our range, our zone, our consolidation gave us 30 pips. So now what do? We simply trail our stop loss to entry. So look at the value of our stop loss up here. This was the stop loss we used on this trade. So now on this stop loss, what we do when we talk about trailing stop losses is we simply just adjust it, changing this value to this. So you go to your MT5 or your MT4, you modify your trade, then you change your stop loss value to your entry price. It means that if your trade reverses, it will simply just use your entry price as your stop loss. It means where you took the trade is where you'll be taking out. It means that you not lose any money on that particular trade because it's what, a break-even or a risk-free trade. Now, what does the next candle do for us? The next candle now strongly breaks out of the zone, because that's exactly when our news is also released. Our news actually came at 12:30, and this candle also closed at 1 p.m. So the news and the candle also aligned and gave us a little beyond 50 pips on this trade. So as you can see, your stop loss is at your entry price. It means that if this market reverses, it will simply just take you out at entry. So our stop loss was here. So what does it also mean? It means you can also come back and then change your stop loss value to any price in profit. So it means that now I can come back again, change the value of my stop loss to this as it keeps moving. I've kept holding this trade. So I smashed both take profits. I actually smashed the third take profits this morning as well. As you can see, it's still dropping. We've currently made over 120 pips on this trade and it's still running. So holding about 10% of my profit. So you can see we've exceeded 120 pips on this simple trading setup. So now if the market gets into my support, what do? I simply just apply these same principles. I wanted to tap into my support, then I want to see a consolidation, then a confirmation. But in this case, I'll be wanting a bullish presence because I want the market to reverse and go up for a buy for me. Or we can also easily have a bearish continuation. It means that in this same zone down here, you can also easily have something like this happen here, where the market will break out of this zone. So if it breaks out of this zone, it means that we can take another sell here with our stop loss right on top of the consolidation, expecting the market to keep continuing to the downside. So this is how we simply caught over 120 pips with my trading community on Telegram with just a simple support and resistance strategy. So all the things you hear, like I always say, every strategy works. It's how you apply it is what makes you extremely successful. If you want me to keep making more videos like this, make sure you're subscribed to the channel. Make sure you like this video and then share to as many traders as possible. Share to as many retail traders as possible. Also, make sure you click on the link in my description to join my Common Forex trading community. If you want to trade with me, I have a community on Telegram with currently over 12,000 active subscribers who trade with me on a daily basis. So if you want to trade with me, click on the link in my description to join my trading community. Then click on the link in my description to sign up with my recommended broker, where they have the tightest spreads, 24-hour customer service, as well as instant deposits and then withdrawals. You can also keep up with me on my socials: Common Forex on Instagram, Common Forex on Twitter, Common Forex on Telegram, Common Forex on TikTok. As usual, thank you very much for tuning in today's video. See you in the next.